Moving up now, Nigeria's inflation rose to 21.47% in November from 21.09% recorded in October, representing the 10th consecutive monthly increase since the start of the year. The Nigerian economy has seen its headline inflation rate increase for the 10th consecutive month, further eroding the purchasing power of the citizens. And a rising inflation can be costly for consumers, stocks, and the country. Well, stocks and the economy. Talk to us about this. Let's have your thoughts on this.
Well, Ambrose and the fixed income trade already said it. You look at the returns, inflation is already up. If you 21.47.
Yes.
And you're talking of the fixed income, less than 10%, have we?
9.8.
9.8, so you can see. But for equity, of course, like you said, it's very volatile. We are seeing companies that can give us 2-digit return within this short period of time. So it is obvious that the equity space is the space to be. However, like the fixed income trader said, you need to also understand your risk appetite. It is not everybody that can, have that kind of risk to just go into a very volatile market. But of course, the equity market is from day one has been very, very volatile, whether you like it or not. So you've been in that market, we assume that you have taken up some level of risks. It's as simple as that. And all the equity traders I know and investors, they know. Because there are some years the company will not even pay dividend. And that does not mean that the next year they will not be in that market. So, yes, the equity space is the market to be. However, investors can still diversify their portfolio, have a balancing, have a bit of fixed income. Of course, to play in the fixed income market in the country today, we are not talking of 1 million naira, we're talking of billions. So how many of these investors are able to have that kind of fund? So that's why you see a lot of them to start the equities market is the place for them to be.
All right, we're looking at inflation now, the impact it's going to have on the market.
Yes, inflation, of course, we've said, rising cost of funds, rising cost of operation, which will impact on their distribution, increase their operating costs. Of course, if their turnover is really high, that's going to reduce some of the profit they're going to make. But you look at sectors, despite inflationary rates, we are seeing certain sectors. In a way, I must commend the operators in the capital markets, that is stock market, both traders, investors.
And the companies.
Yeah, the companies, because I was a little bit, skeptical. But it's like the investors have said, let inflation rates go anyway. It is for them. Let us take the equities market. And that's why we are seeing the boom in the equities market. Because the chances of you getting that yield, it is there in the equities market, while in the fixed income. So the equities market, the inflation rate is going to affect equities markets, agreed, in terms of the companies in their operation. That is clear. But look at some sectors. Of course, I will not be able to tell you that this sector is better than this sector. I will not tell you that.
Well, that's not what you will say. I mean, you can just guide, people.
Yes. If our investors, they already know the sectors that whether we like it or not, they will still continue to produce.
Okay.
And people will still continue to buy their product or services as the case may be.
All right.
Energy sector is there. Telecom sector is there. Even these financial services is there. So you can see investors have a choice to enter any of these sectors. Of course, it must suit their investment philosophy.
All right, very quickly, I'd like to move on to you now. Talking about inflation, there are people who will say that this particular period favors some kind of stock. Some would say maybe you go for growth stocks or you go for value stocks. Talk to us about this.
Yeah, actually, like my colleague just said, some sectors has a potential to kind of, move ahead of inflation. People say we hedge against inflation through stock market, especially those are real estate backed stock and commodity backed stock. Prefer to go forward to hedge against inflation. Like you just mentioned, if you look at even today, Guinness chart, we saw that UPDC led by 10% gain.
Was the highest, yes.
Yeah. Also, you can think that why? When inflation is also in this kind of direction, people tend to go into property, and this is what we call real estate backed company. Also, look at commodity also where the company can easily pass the high cost to their consumer, and they still buy those products. At the end of the day, the company will post in a positive number that will drive price. That's why you can hedge against inflation through stock market, because as you are increasing your price, people are buying, you're making profit. That profit also impact your price, also impact your payout. You see, that will move your price up. That's why most times, not every company can easily do that, pass their cost to consumer. That's why I said, there are some sectors that you can put your head, you are free that, yes, this sector I am. Like you mentioned, now that we're seeing that the central bank has continually increased rates since May, automatically, when the bank partially saying this bull was saying, back the one that started this bull that was just in the market, because the bank's stock were low, become attractive for investors. When you start buying, you see that interest started coming to the market again after market had lost for almost 5-6 months down. When we saw that now, that bank remained the toast of investors to speak now. Today, we saw Zenith Bank crossing 24 naira. That is that it's getting somewhere. Like I told them one of the class that every year, go and check Zenith Bank. It closed between 27 and 31. After that, it started coming down. Because at that end of the year, Zenith Bank would like to close higher than open the year. That means it's already moving towards that. And we'll have less than how many days to the end of the year. The price will already touch 27, 28. After that, start coming down because they want to close.
I'll remind you of this.
I think that for the past 10 years,
it's a normal practice.
I have seen the move that once it thought that at the end of the year, it was 31st of December, it touched 28 naira or 31. Once it touched after that, start coming down again. That means it's already there. And that's why the people that are smart will look at what is the GTB doing today. GTB is around 20 naira, 90 kobo. It touched 21 naira today. That stuff there that Zenith Bank can be moving to that level, and this one remember down.
It will follow suit, yes.
And also look at the volume that's here today. One trade about 16 million volume, one trade about 14 million volume today. So that investors in the market know where to plan. Also, not only that, dividends that come from this company are especially their last payment for the year. Their dividend might be a little small, but their full year will come that you as an investor, assuming that you get almost, like I said, 13% yield on that dividend alone. If the price move from 21 to 25 naira, that is almost 25% plus what that is almost. Like I said, investors will have to look at the whole of equity market so that they can plan their portfolio and celebrate Christmas, joyfully. That's why people are that the economy is hard. So invest wisely so that you can celebrate wisely.
All right, very quickly moving.